Welcome back to the Sounds of the Baskerville. Good afternoon, Chris. How are you?
Good afternoon, James.
Yeah, the afternoon edition of a vodcast series we'll be doing post 100 episodes. So this is the 100th and something episode, Chris. So, and we've been sort of walking through the last 100 or so about different topics we've talked about.
100 very well planned and
Very
thought out
thought out
podcasts, yes.
and thoroughly researched. Now, in fact, a lot of it's been about trying to pull your own experience, and in this case, we're very pleased to once again be joined by Ginette Muller, GM Advisory. How are you, Ginette?
Hi, guys. Very well, thank you. Thanks for having me again.
Yep.
Well, I think as a friend of the show, shall we say, it's thanks, Ginette, for coming along. So I thought a concept that we talk about a bit, Chris, is that match fit idea, and we basically lifted that from Ginette, didn't we? There was a sort of
It was a trademark that we did steal from Ginette. And it was basically getting, is a client ready to undertake any of the hats that we have to wear? And most often they're not, unless they're willing to just literally blow their whole business up immediately, in which case you always match fit. You just hand us the keys immediately and walk away. But if there's a restructuring element, you want to survive through the process, you've got to get match fit.
Yeah, 100%. I think I coined that term about 5 years ago at a conference in Canberra, where it was as cold as it is today. But anyway, it's really about liaising with the directors of the company and sort of just making sure that they know what's going to happen to them when they go through door A, B, C, or D. And it's just helpful for them, but it's also helpful for the practitioner, I'd have to say.
Oh, hugely. Like someone that's already ready to go, it's which your director advocates have already prepared them. Then it's just hit the green button and go.
It's sort of like an intelligent director or a director, no, maybe rephrase that, a director who is prepared. Is that what you're talking about?
100%. Not only for what they're about to experience emotionally, but also in terms of, have we got the tax returns done? Have we cleaned out any of the messes, etc.? Just all of those questions that they want to know, what if this happens or what if that happens, which they really shouldn't be asking their practitioner about, because the practitioner ultimately has an obligation or a responsibility or a duty, in fact, to creditors and not to the director. And they need to understand these lines, and a lot of them don't.
So so that's an interesting question, because we often do say to people, Chris, that they should approach you first, but your job is also to manage all stakeholders, though, isn't it? So
but if I looked at someone and I said, I think there's a survivability element here, but you're not ready for me yet, well, that's the ideal referral out to someone that can help them get ready.
To make them match fit.
To either make them match fit or to deal with the issue they're facing at the moment. Do you really need to go into liquidation? Could you get financing? Could you do a voluntary administration? Could you do a small business restructuring? So these types of questions and answers are something that someone like me might do once, even if the company goes to Chris in the first instance, he might say, yeah, look, I can see that there's a number of options here available for you. You need to talk to someone else at this point in time, be it your accountant, your lawyer, or someone like myself, just to tell you what those options are. And if, say, for example, Safe Harbour might be one of those options, to walk through that door with them.
Why I often say, just come to me with all your problems, right? And is because I have a knack for digesting and figuring out what the actual problem is, because a lot of the time people want to talk to me about an issue. They go, I've got problem A over here, and then you sort of walk through the process. You're like, you don't have problem A, yours is C. Like you've got a completely different problem. But I like to think that with the networks that we've got and the professionals around us, that there is someone in my network that you can be directed to solve all the other issues that might be there.
Oh, yeah. Look, I'd have to reinforce that and say that I totally agree. There's not a lot of people who really get it and say, oh, I see what your problem is. It's not what you think it is, because you, as a layman and not experienced in this area, don't know what you don't know. Whereas someone like Chris knows a lot, knows a lot about a lot in our area, and can pinpoint it and say, well, you need to do this, or, yep, no worries, I can help you right now, or you need to go and see this person first. So, yeah, it's a true skill, And people who've been engaged in insolvency for a long time have it and can really help directors in that circumstance.
And there's that. So I think we've talked about this before, and is that without sort of getting too wound up in it. There's that old expression about if all you've got is a hammer, then everything looks like a nail.
Well, that comes from the expression that a person like Chris doesn't just have nails.
That's right.
Doesn't just have a hammer, right?
He
He can differentiate between different problems and doesn't just say, "Oh, I can help you. That'll be a liquidation hammer." No, you need to go to the right insolvency practitioner, obviously. Yeah.
And that comes from experience. I suppose that's part of the background of why we started these. We came up with the idea of having a podcast to sit there and go, well, distill some of the experience that you've got over the years to give a broader perspective than, oh, that looks like a liquidation. Oh, tick box one. Oh, there is no box two. So,
and dispel some myths.
Yeah.
I mean, even I refer to myself as a corporate undertaker, as that's really just a pun, just to see how intelligent the other party is. But it was to dispel the myth that we're not there to just. The biggest fear is the only advice we give is give us the keys to your business.
Yeah,
and because
that's not true.
No, it's very one-dimensional thinking. Whereas I'm pretty sure for my entire time in this career, my first thought is always, can I run this business? That's the first thoughts I run. And then through lines of questioning, I then either digest that answer is in the affirmative or the negative. And in which case, then you think, all right, what are your next options?
So say a situation where you go, hey, Ginette, there's something here. It's not a liquidation maybe yet, or I don't know what it is. It might come to you. Is that, and then your job's to go to the director.
That's right. My job is to go a bit deeper, maybe speak to the accountants, maybe speak to the lawyers, have a look at any underlying litigation, look at what options the client actually has and why they haven't exercised some of those options. Why haven't you taken that offer of finance? Why haven't you sought partnership with another person or whatever it might be, and just sort of give them the options. Option A will lead you to here. Option B will lead you to here. There's risks involved in those. Or option C might be, maybe it's time. Maybe you're not getting on with your partner in your business, and maybe it is time to call in Chris, and maybe he can sell it. Or if it's not saleable, maybe there's some assets that can be sold and pay off the creditors. Yeah. So every matter is going to be different. They're all bespoke. They're all different. And, you can't just say, you just can't use the cookie cutter for each one, I don't think. For each client that I engage with, it's like they'll have special situations that apply just to them. Give them the time of day, listen to them, find out what's really going on, as Chris says, and then it might be exactly as you say. It might go straight back to Chris because they really do need a liquidation. But it might be a case of getting organised, because even if you are going to go into liquidation, sometimes you need to understand what has happened over the years leading up to that liquidation, what transactions might be undone, what are the consequences, have you done any insolvent trading? Just be prepared to know what's going to happen once you do put the company into liquidation. And I suppose that's where a lawyer or someone like myself comes in, and that we can just tell them the facts. And sometimes that might assist them with finding a little bit of extra money, or working a little bit harder with that partner, or maybe getting, a line of credit to keep things going and to implement a different course of action in their business planning.
I had literally this discussion yesterday, and I swear this accountant calls me in because she realizes that her clients don't listen to her. So she goes, okay, well, I'm going to bring in an expert. And my job was to scare the bejesus out of their clients so that they go, I should listen to the accountant. I swear that's it. But anyway, this lady received a DPN and director penalties notice. And of course, 21 days, it becomes personally liable. We're within that 21 days. And through lines of questioning, at the end of the discussion, took about an hour, she goes, yeah, I think I'll just pay the debt. I just went, okay, great. But again, it was using company resource facilities to draw down on to pay the debt, because as we all now know, from 1 July 2025, you don't get tax deductions on the interest you pay for tax debts anymore. So by converting that tax debt into a commercial loan facility, you now actually can get the tax deduction. This is not tax advising course. But so in weighing up the options, it was better to draw down on a company facility to pay the tax debt than it was to accept personal liability or try to draw down from a mortgage over the property.
Yeah.
How often, though, Ginette, would you find a company that has those kind of options? More often it's minutes to midnight, isn't it, for lots of them?
Oh, look, for sure. Again, it's difficult to categorize everyone in same boat, but, I was speaking to an accountant yesterday who was telling me that he feels like it's the worst business conditions he's seen in a very long time. So the availability to credit, not everyone's going to have that. They've come out of COVID. They've that old excuse is gone. Now it's just trading conditions, and a lot of his clients are feeling the pinch at the moment, and there's no other alternative options out there for them. In terms of accessing finance. So, it's difficult.
So time is running out. Is that okay.
And unless you got real estate, which, real estate behind the director, which has been appreciating over these last few years, creating equity, and you can access that and then finance that. So, people can access, like you might have $1 million in equity in your property, but could you finance an extra $1 million facility if you had to? So obviously they create hurdles. But it was funny, I was talking with an accountant and the specialty was in the trades. So that's their specialty. He said last year he lost 40% of his business because 40% of his clients all of a sudden hit walls that they couldn't get over or around. So imagine that impact to your business.
Yeah.
So we've often talked about don't have one client, like the government or somebody like that.
Yeah. Don't have one client or a concentration risk, I think is what they call it. So don't concentrate in any one industry, don't concentrate in any one field or segment, have a bit of a variety. And I think there was another insolvency firm many years ago, I picked up on this. They said, no one client should represent more than 25% of your revenue. Because if you think about it, if that one client goes, 25%, there goes your net profits. If that one client goes.
Yeah, wow. But it's interesting, a person who's lost 40% of their income from a portfolio of clients.
Yeah.
That's tough for any business to survive. Okay. And is that the sort of a safe harbour scenario potentially for somebody like just has a shock like that?
Absolutely. That would certainly encourage directors properly advised to go and say, hey, there's something on the horizon here. There's danger Will Robinson, basically. If we don't plug that hole, we've got some serious issues because, we're now starting to fall below break even probably. So let's, another loss of a customer could cause all sorts of difficulties. So are we going, when they look at their cash flows, which everyone should be doing, what does our future look like? Are we going to head into a zone of insolvency if we don't plug this? Well, you can have the best hopes in the world that we'll find a way to plug the hole, but what if you don't? And so that might be a time when you consider putting in place safe harbour, because your ability to meet your debts and as and when they fall due, when you're starting to get into that zone, will be the first thing that a liquidator will say, well, you ought to have known you were starting to miss payments, you're probably insolvent, and then start to hold you personally liable. So, look, you would want to be considering safe harbour if it's getting serious, and that's what a lot of companies do.
As the former mayor of New York City, Rudy Giuliani, he said, hope is not a strategy.
That's it.
It's not a strategy.
And we've talked about that river in Egypt as well.
Yeah.
So not denial. So, and there'll be ones there's ones that you can save, Ginette, and there'll be ones that you can go,
Well, in terms of safe harbour, what I find is, I like safe harbour. It's because it puts into a company a formal structure of governance. The better outcome plan forces directors to get together and look at what their plan is, look at how they're going to make things better. That's why it's called a better outcome plan. What are the strategies? There's about 9 different strategies that they have to look at, or headings that they need to focus on. Each month or week or whatever it might be in their particular case, they start measuring and looking at how those plans and those strategies are panning out. Are we getting better? Are we getting worse? So you've got that real focus for a start. that those directors, those captains of the ship are implementing, and it just really helps them get focused. But what it also does is it goes, remember that offer we got last year that we turned our nose up at because we didn't think it was enough? Well, maybe it's enough now. Let's get those guys back on the phone. Or remember that there was someone who said that they'd buy 25% of our business? Maybe we need to get them. It really starts to focus people's attention on everything's on the table. Start looking at all of your options. We've got a cash flow problem or whatever it might be, or, start thinking outside the box. Now, it's easier to think outside the box when you feel that you're protected from insolvent trading. Even if you don't know what insolvent trading is, it sounds bad, right? But what it is, and when directors get to this stage, they pretty much know what it is. I'm going to be held personally liable for the debts that I incur today. And that sends shivers up their spine. So I don't want to be feeling that way when I'm trying to turn this ship around. So I need something, a shield, protection, to come in and say, hey, we've got you. You're going to be all right. Just hold the course. Do what you need to do. And if worst case happens, you go into liquidation, well, I'm not going to be sued personally for having a red hot go at this better outcome plan. So, yeah, you can save them. Many are saved. I haven't seen, look, it's difficult to say the percentages, but yeah, just would rather not say how many I've seen go down and how many survive. With me, majority survive, but that's probably because I prefer to go with clients that are likely to succeed.
I think one of the things, if I understand what you do, is you're more like an assurance, you're not actually in there you're sort of saying that's a valid plan, this is a valid process, as opposed to necessarily people who get in there and try and be the turnaround person and then give safe harbour at the same time.
Sure. Otherwise, if you're the director, for example, you're the one in control of the ship. It's your risk. If you can't do it today and you can't do it tomorrow, what are you doing? Why are you there? Are you going to rely on outsourcing your obligations, your responsibilities, your ideas, your strategies forever? Maybe this is not for you if you can't write that plan. By all means, go and get some temporary help. But I really do put a lot of stock in the people that I'm working with, that they need to come up with the solution, or they need to change their board and put someone on the board that can actually come up with the solutions. And from that perspective, I sit with those people and look at their plans and help them with the governance side of things, more so than the turnaround side of things.
Your trouble would be trying to get sacked, wouldn't it? Wouldn't it be your trouble to be trying to get off some of these people? Because some boards would like just being someone there telling them kind of not what to do, but to keep them accountable to each other.
Small business, they identify their company with their human selves, and it's almost, they're intertwined. So, when they say, oh, this is my company, I'm the shareholder, I'm the director, I can do whatever I want with it. It's like, not really.
No.
Not when your company owes money to other people. You can't be just ripping money out left, right and centre. Don't get me wrong. If you're paying all your bills on time, you got loads of retained earnings and something great, go nuts.
Yeah.
But not when, as soon as your company goes into a period where it can't pay its bills on time, there's a duty to the creditors. That is just placed upon the shoulders immediately, right? So it's you can't have this mindset of the company and me are one.
It's not entirely mine. It's not entirely under my control.
And the governance element actually, I imagine, just keeps them that no, the company is its own legal identity. You have to treat it separately to whoever the human directors are.
Yeah, it's the quid pro quo for being able to operate behind a shield yourself. You have a corporate veil, and the reason you're entitled to do that is because you have responsibilities and you have director's duties. So that's fine. Operate. You don't have to operate in your own name, and the company can have a separate legal entity. But just be aware, in exchange for that, there are responsibilities and duties, and those directors' duties are to be acting honestly, acting in the best interests of the company, not insolvent trading, etc. So that's the trade-off.
It's interesting to have as a bit of an update. We've talked about safe harbour over the 5 series, the 5 seasons. So it's been interesting to get a bit of a kind of an update of where things are up to and again how that's sort of evolved and how it's still a thing. So and directors should probably use it.
Have we seen any cases yet where a defence has been raised with safe harbour and has been challenged? Have we seen
Still
that?
not. Oh, well,
Wow.
we've still only got the Balance case, which was a pretty pathetic attempt at the last minute of trying to defend against an insolvent trading case. Really sad case, but we still haven't advanced beyond that at this point. So, either liquidators are quite happy with the job people like myself are doing and are quite happy with the director's claims, or they're just throwing them out and
No director's gone down with loads of assets behind them to be challenged
at this point.
at this point.
Yeah, exactly.
We'll watch this space. We'll follow that one through in future episodes, shall we, Chris? But
Yeah.
anyway, so thanks again, Ginette, for joining us on the Sounds of the Baskerville on our 100 and something episode.
Yeah.
Honoured
Thanks.
to be here. Thank you, guys.
Thanks.